Futures and options on futures trading involve substantial risk and is not a suitable investment for all types of investors. Past results are not necessarily indicative of future results. When I use the word I in this video, it refers to what I teach in my charting course or what I author in my twice daily oral and written updates. Prices shown on charts and quote boards are in real time and take into account all known activity up to this point in time. And if you'd like to read more of this disclaimer, simply hit the pause key on your video player. Believe me, I am late. It's 5:20 in the afternoon. That's p.m. Central Standard Time. I have been watching these markets now for about 13 hours, so you get tired when you do it, but it's the way it is. So in the metals, the gold's up tonight, but that means if it's up $4 at 1245.70, it was down to 1241.70 on a close. Big break in the market. Silver up 8 cents, getting a break from closing around that 1567 level. The Bitcoin is down $20 tonight and trading in a range of $300 so far. We have the FOMC Open Market Committee meeting, Fed Open Market Committee meeting tomorrow, and we're going to see that the Fed probably makes a rise in their benchmark rate of 25 basis points. Fed Chair Yellen, this will be her last big news conference after an FOMC meeting because she'll be out for the next news conference, which occurs in March, and we'll have new Fed Chair Powell in place. What the market's more focused on is what she says than the quarter-point hike, which I think is fully built into the market. I don't know that she's going to say that much. Why should she when it's Mr. Powell taking over on the first week of February? So I don't know what the market's looking for there, but you always got to pay attention because you can get something out in left field that you weren't ready for in these announcements. Let's take a look at a weekly chart of gold closes. And all you could say is this market has come down and come down hard. The last breaks we had here that mattered were 1261.60. We've gone through that. We're at 1238.50. You realize what a big break this was in the market. When we take a look at the current break just on a daily chart of closes, 1241.70 is where we closed today. We're bouncing tonight, and I've already got that reflected for you, but just a big thrust to the downside. You can see how the daily charts have come unglued from this relatively sideways action. Once you got under this level, that was it, and I'm sure that if you go back on some of my videos, I probably made mention of that if it got through it. And you did, and you've got a pattern of lower highs, lower lows that was in place. Take a look, all at that time. You can come back here, it would have been the high there and there, and when this day happened, I think it was right here on the 5th, it was just Katie bar the door. And from that point on, take a look at what this market has done. It just came unglued completely. A big drop of 30-some-odd dollars. I consider that pretty large. In addition, you had a bearish crossover tonight. The 18-day moving average of closes, the 18-day MAC, got under the 200-day MAC. Now, more important to me is the 100-day and the 18, but this is still important. So we've got the short-term average under the very long-term average. It's almost one full year. Think of how many business days that is. And the market's under both. So we have scales of resistance on rallies into the 1275 area and then 1292. In terms of staying under the lower Bollinger Band, all the market is doing is moving to the right-hand side, which is what it should. But if you take a look at these Bollinger Bands and you look at what they do, one of the things that you'll see me regularly talking about and that I teach in my charting course, and by the way, what you should do for yourself for Christmas is buy that course. I've lowered the price by $30. It was $109.95. It's $79.95 if you put in the word XMAS in the coupon area, and that coupon area located under education on our website at www.iraepstein.com. But when you got down to this, that was your support zone. If the market's going to bust through it, often the first day you don't know. But if it does, this all becomes weight heavy. In other words, it's a resistance zone at that point. The market bounced, and then from there, Katie barred the door. Away you went to the downside. At the same time, you have an embedded reading, which means what? I believe that price momentum leads market action. In other words, Momentum leads price. What this has done is it converted an oversold condition into a downtrend. And until the red line closes back over 20, the bears have control of this market, and I think on rallies you see sellers coming forth. Get the red line to close over 20, and then what often, not always, often happens is price makes a run for the neutral spot. I call the line in the sand, the neutral spot on a chart, that 18-day average of closes. That's what I'd expect. In the Bitcoin futures, this is a 15-minute chart. Now, you might say, why am I using a 15-minute chart? Because I have no history. Today's day 2 of trading, and if you're going to look at the futures, I have to go to a chart. I could put the 5-minute up, I could put the 15. But the reality is the market is fighting between the 5-minute chart, 5-minute average, and the 100 5-minute average in the green and in the red. Hard to say, it gets tongue twisting, but that's where you're at. You're also oversold in the market down here. As I look at the market, I could argue that you weren't an uptrend, but tonight, since I have prepared this for you, this low is breached over here, and in reality you have a lower low and a higher high. You're not trending and you're getting into an oversold area. The gold-silver ratio is going from 74.63 to 79.58. And what that means is gold has been stronger than silver. You don't have to, you had before in your bushel basket, it weighed a lot, 74.63 ounces of silver to get 1 ounce of gold. Now you need 79.48. That just keeps getting bigger and bigger. 80 is a historic number. A lot of traders look at that as a number that they say it's very hard for that ratio to stay beyond it. In the gold ETF, which is GLD in this case, I wrote gold, but it's GLD. Again, I was rushing. The market's got lower highs, lower lows. It did come back and settle over the lower Bollinger Band, but if we take a look at what it's doing, both numbers under 20, and the day before under 20, you're embedded. So until the red line closes over 20, rallies in this market are probably doomed at this point. GDX, the same thing, lower highs, lower lows. You can see how the market's got the embedded reading. It was staying under the lower Bollinger Band 2 days ago. It moved over, and now it's challenged the lows again on that. Just a bearish pattern on this chart as well. In the silver market, a bearish pattern with an embedded reading. I mean, other than people picking bottoms, why would somebody be trying to buy these markets down here? And in the copper, well, you don't have the embedded reading, you're just oversold. So this market's trying to come up ever so gradually and get out of this condition. It could certainly run better if China were doing better, but we haven't heard a word out of that. And suddenly we're getting a lot of resistance between 305.40 and 306.50. You can see that. So that would be a number if the market worked up to that I'd expect resistance. Is there a trend here? No. The swing line's up, price is under the 18-day average, and you're oversold. In the platinum, you are in a downtrend. Lower highs, lower lows. At first, you were putting a succession of closes under that lower Bollinger Band, and like I tell you, I only think it stays under there 5% of the time. So if we look, let's go to yesterday. Yesterday, you closed at 875.70 under the lower Bollinger Band. One. Day before it, you closed at 892.80, but you were over the lower Bollinger Band at 886.20. So while you had 4 days or so in a row prior to that, you broke that string of 5, and that's all that I'm saying. This is called running the Bollinger Band with an embedded reading, nothing bullish about that. The strongest of the metals continues to be the palladium, but it has a pattern of lower highs and lower lows, and it counters that by keeping the market bid over the 18-day average and momentum flat but trying to point up. You could catch the shorts here if this market gets over 10.05.20, I believe is that number, 10.05.25, and if that happened, you might even make a run at the upper Bollinger Band. So this 18-day moving average proving very important, and of course the gold market, an enemy of most of these metals, as it's been working higher. Plus, you're getting better yield as our interest rates in America are going up, and that's helping the dollar, and that's taking money out of the metal market. In addition, you've got our stock market, the vacuum cleaner as I call it. But if you'd like to learn more about seasonal trades, metal seasonal trades, there's a source that I think is phenomenal for that. And what I mean by metals is the Moore Research Center has a database. They look at days that the market either peaks or it makes a trough. They go back and they look on their database for typically 15 years, and then they'll look and say, if you bought on this day and got out on this day, you had a profit, the trade worked or it didn't work, or if it did make a profit, here's the average profit, blah, blah, blah. Does anything always work? You know better than that. But the beauty of this database, and I love it, is because it gives me an idea of seasonality, and I do believe in seasonality. It could be because of taxes. It could be because the end of a growing season. It could be because of cold weather. It could be one of a number of things. You know, seasonality, gasoline prices in the summer go up. You know why? People hit the road and drive. But in September, they stop driving. Doesn't mean prices have to fall in September, but you generally look for them to back off. Does that work on a seasonal basis? So you get all these ideas. But what's beautiful is they write about it, and you have interactive charts to work from. And that, to me, is very important. So if you'd like a 2-week trial to them, all you need to do is give us a call at 866-973-2077. Had a problem there. This is, by the way, what their page looks like when you go to it, and then their seasonal studies. We're doing something with our computer in the background, and I know that's hurting it, so I'm not going to touch anything at this point. But you get 2-week free trial. They get you a user ID and a password. It does spreads, and it does the futures markets. And here is that interactive chart, and I look at this all the time because sometimes my charts will be very much contra to what they're looking for, and I'm looking at a bigger trend. So I'll say, what happens in a bear year? What happens in a bull year? You know, maybe I don't want to look at the past 15 years or the past 30 years. I want something more current. Well, their charts go all that way, and you're able to work with it. And again, it's a tool. Nothing should be your one thing. This is just another tool. Take advantage of it. I'm Ira Epstein. You have a great day.